Hi everybody, Eddie here. Going to do a new market update for next week. Hope everybody have a nice holiday. Happy New Year's. We finished 2022 with a consolidation. So the first week of January is a very important week on how it finishes because it kind of give us a hint of how the month's going to go. So this is the S&P 500. We were in this consolidation for the last few weeks, and then finally on Friday we've broken out of this consolidation range, and we actually hit that 50-day moving average. I got a little rejection at the end of the day, but it's still a very good engulfing candle over the entire period. So for next week, looking forward to gap up above 3,900 and possibly fill this gap of 4,000. Now, this level is a very important level. That's where the 200-day moving average is. That's also where the top of this big channel is. So um, this is a very important level to break if it can break through. If you can break through this level, most likely it's going to test these highs right here. This is the next level resistance, which is 4,100 to 4,150 area. That's also the next supply zone. So you can see on the volume shelf right here, there's a huge supply zone up here. And there's a huge one right over here at 4,000, right? There's a gap right here that needs to be filled, and there's a gap up here that needs to be filled. So if next week we're able to pass through of this, fill all these gaps, most likely we're going to test this area right here. And this is the area that everybody will be watching, and likely is going to get rejection off this area. But if he actually breaks through this area, then you can trigger a whole new cycle going back up, right? So pay very close attention what we're gonna do next week. And the chart right now looks fairly good for a pop into this 4,000 area, right? So I'll be playing the pop to 4,000. Once I hit 4,000, I'm gonna take my profits and I'm gonna watch what's going to do next, right? Because that 4,000 gets rejected, likely we can get their next leg down. If it doesn't get rejected and we continue higher, we're gonna fill the rest of this gap right here, and then test this supply zone right up here, right? So that's pretty well the plan for the next week or two. We'll see what happens early next week. I'm really hoping that we can gap above this area right here, and then go retest this area. And it would be nice if we actually come all the way up to test up here before the rejection, because if it comes all the way up to here, chances are it can pull back and retest the 200 and we go higher, right? So, and that could end this bear cycle, or at least end this downtrend, right? If it doesn't, if it just gets rejected right at this point right here at 4,000, it's likely we're going to start seeing lower lows, right? Because that's a high demand area, high supply area as well, and it is also the 200-day moving average in the top of this channel. So that tells me that the bears are still in full control, right? So that's what you look for. One interesting thing is right here, down here. This is how many stocks on the SP 500 is above the 200-day moving average, and we are making these higher lows, higher highs. So that's the start of a trend change, right? As you can see, that's a positive divergence, because you can see we're getting lower highs, lower lows, lower highs, lower lows, just like the chart was. And now the action is making lower highs, lower lows, but the overall index, the number of stocks above the 200, is actually making higher highs now and higher lows, right? So that is a bullish divergence and possibly a reversal area, right? So pay close attention to what's going to happen in the next week or two at these key areas. If this 4150 area get taken out and we actually break up, it's very likely that we can see the end of this downtrend, and then slowly trying to reverse back up into a bull cycle. All right, let's take a look at the cues. Actually, I want to show you the weekly chart as well. The weekly chart's actually pretty interesting. So the weekly chart, the last 3 weeks we have been hammers and dojis, right? last 2 weeks, and this week we have an nice bullish hammer as well with volume. So it looks to me that we're going to try to make a dead cat bounce somewhere. So we either get a dead cat bounce, hit some of these areas, get rejected, or we get a full blown rally and taking out this high and make a new high into up here, and then that will break this downtrend, and then we'll on our way back up, right? So just watch those things carefully and see what happens. You know, the likely scenario is we're going to get rejected, but you never know. So we'll see what happens by the end of the month there. Okay, let's move on to the Qs. Qs are same thing, right? At the weekly chart, there's a few dojis likely to test the 8 and 21 up here to get rejection or not, because it's still very defined downtrend right now. Let's take a look at the daily. So same thing, right? We have a sort of like a triple bottom over here that's been tested multiple times and been bouncing off this level. So and this is the level that got rejected multiple times as well. It's that 280, 285 area. So when it start rallying back up, that's the area it's going to test. It's a very important level. If you can break through it, we can test the highs and the 200-day moving average. If it doesn't, it's likely to get rejected at the low of this consolidation range, which is the peak supply zone right there. So right. Let's take a look at some stocks. Well, one of the things I did notice was the solar sector is actually trying to reverse over here. So solar stocks been performing really well. So if you look at stocks like FSLR, it's working to be like uh, a nice channel up, and it's in like a fallen wedge. Just broken out the fallen wedge with volume on Friday. Hopefully, there's some follow through and CSIQ as well. So CSIQ is also in a fallen wedge, and then finally broken out with volume. If it actually breaks the high of this area, you can continue up and retest some of the highs over there. So when solo stocks get moving, they tend to move fairly quick. So if you want to take advantage of it, you can take the trade after it breaks out, and then just stop slightly below it. Right. And let's look at the FANG names. So Apple is at the demand zone again. So we're in this demand zone. The bottom of the zone's down here at 110. We're just right about the demand zone, and there is a reversal pattern with a big engulfing green candle breaking the consolidation lows. So we'll see what happens next week. Going to test this low right here, also 21-day moving average. If it gets rejected right there, we're going to likely to get our next leg down and come all the way down to like around 115, 110 area. If it actually rallies up and it comes back up, it's likely that you can just come up to test this breakdown area, which is around that 140, 145 range, and then get our next leg down. Right. It is forming a bit of a topping pattern that it could end up very ugly by coming all the way down to $80 range, right? So make sure you take a look to see if we're going to make lower highs and then come down, make lower lows. If that's the case, then we're coming down to like around this 80. So now watch out for that. If it actually just bounces and we continue up and we start making higher highs, then that could be a trend change, and we can go higher. But as far as right now, it's looking somewhat of like a topping pattern, in that it's like you can come over to pre-COVID levels, which is this demand zone right here. So if this key area gets broken down, then that's the area we're gonna come down to. AMD, same thing. It's still in a very defined downtrend. So as I said before, we were looking for this area as a top. That $80 range, we hit that 80. Tested twice and failed, so we came down. Interesting thing is we actually made a higher low, so keep a watch on that. If we actually come up and make a higher high, that means that we could break this downtrend and start moving higher, right? But if it went up, just retest, make another lower high, and then finally break the low of this, and then make the lower low, then we're just going to continue to go down. Then the next level down is $50, and then possibly 35. 35 is the main supply demand area. So if we come down to 35, that's a good area to start backing up a truck and hold for long term. Even right here, it's a good buy zone for long term play, but I would layer in small quantities at first, and then as it start breaking out, you add to it, or till we start reaching down to these key demand zones. That's when we start going heavy into it. Otherwise, in between, it's just very small quantities, $2 cost average in for longer term, and then as long as you have a plan and size it properly, right? Then when this thing finally bottoms out, you're gonna make a lot of money. Amazon, the demand zone right now. So we're at this key demand zone right here. You can see this is where majority of the buyers are. It needs to hold this area. Otherwise, if it fails this area, the next demand zone is at $50. It's quite far down, quite way down. It does look like it's trying to start basting around right here. So likely if it does base, we want to test this 100. If it fails 100, we're going down to 70. At 70 is where you want to start buying. And then if it comes down to 50, you really want to buy lots of it. But at 70 is where it's a really good buy zone. Even right here, right now, it's a fairly good buy zone to start scaling into it. I did sell some puts already for 45 days out. So if they continue to go back up, I collect the premium. It comes down, I get assigned the shares, and then I'll sell another layer of puts to get more shares at a lower price. And then I dollar cost average in for a longer term play because Amazon has a really wide moat. It's very hard to replace, and it's going nowhere. So during these cheap during these bear markets, they can get very cheap, and that's where you can buy high quality stocks for the longer term on the cheap. And then if you have a proper trading plan, then you can make a lot of money once this thing finish basting out and bottom out, and then we going back into the bull cycle, right? Meta Meta still fairly good. They fill the gap, right? Well, we got that gap down, fill the gap. That looks like capitulation right there. So it's trying to base right now. So likely it's going to trade in the range for a while, and then once it flattens out the range, once it start creating a base, once all the moving averages get stacked together and flatten out, then possibly there's a big reversal coming. So for longer term, it's still a decent play because how low is it is trading at right now. The valuation is actually quite good, even though their growth is slowing down. So it's more of a tradable stock right now, and I would if it's going to stay around flat right here and start consolidating and accumulation start happening, then I would like buy some leap options for like a very small percentage of my portfolio. I would put some leap options to work, maybe sell some puts to fund those leaps, and play the long term game on this, right? Because it's trading at 25% of the value of the highs. So that's a steep discount, even for a stock like Meta. Even there's no growth, but those are usually the best times to buy for longer term, anyways. So as long as they can stay profitable, it's still a very good valuation to buy down here. The better price to get it at is around that $190 to 100, which is this key demand area right here. So you can see that was the area that it kind of bounced off, was right around that $80 $90 area. So that's a good area to get into, and then you can plan it so that you can load more down here. I usually, what I do is I sell puts at key areas that I want to buy at, and then if it doesn't go down that way, I just collect the premium. Since I'm sitting on mostly just cash right now, so I'm just kind of waiting for opportunities to happen. and then I collect some premium while I wait for the stocks to actually start moving again. Uh, Google, we're at this very key demand zone right here. So this is the area you want to start buying your first layer, meaning say I want to plan to buy 1,000 shares of Google. I would possibly buy 200 shares right here. And then I'll sell some puts, sell like maybe two or three puts at 80. And then sell some, once 80 get assigned, I'll sell some puts at 72, $70. And then if it comes down to say, this $60 range, that's where I'm going to start buying, selling a lot of puts, and then buy a lot of leap call options, and then fund my way up, right? So that's the way I plan my trades for long term because it's cheap enough now to actually start scaling into it, right? I would not scale into it up here, but I definitely would be scaling it down at these areas down here. So even though like usually I don't like to try to time bottoms, but at Fang names these are big opportunities, right? Because they eventually they'll come back. These are the companies that's running this world right now. So layering into these stocks are perfectly fine. Just don't try to layer into like high growth names that make no money, right? Those are the type of names that just kind of blows up your account, but you can always invest in Google at these areas, right? So that's the game plan for me. I actually start selling on Amazon next week. I'm probably going to start doing it on Google, maybe Meta. That's one of the names I don't trade that much. And Apple's not at an area where I want to buy just yet, so I'm not trading Apple. But Google looks really good here. Amazon looks really good so far, and Microsoft. So Microsoft's at the demand zone right here as well. So you can also start a position at Microsoft right here, but small because this is the area where it likely come down to if that breaks. So you get a much steeper discount down here if it doesn't hold. So it's holding quite well versus the other names. It's not quite as cheap. So with Microsoft, I'm just waiting around. If it does come down to around 200, maybe I'll start allocating some in there, like very small precision, and then I'll wait till it comes down to around this 150 to 170 area before I start actually going into a little bit more size. And then if it comes all the way down to COVID lows, that's where I'm really going to start loading up on it. Netflix, it was more of a trade, so Netflix filled the gap, so the trade's done. It is above all moving averages though, and they have earnings coming up. So if earnings are good, they see good subscription growth, likely you're gonna see $400, right? At $400 is where I would take profits, if that's the play, and yeah, that would be the only play. Once that hit $400, I would get rid of it. Yeah, so $400 is it's pretty well the peak of this consolidation range, which is a very high supply area. So it's likely if there's a lot of good earnings, it's going to hit 400, and then it's going to get a big reaction afterwards. Nvidia, so Nvidia is having like a inverse hand shoulder type of pattern being developed right now. Um, it is at the first key demand zone, which is around this 100 to 150 area. And right here, you're really looking for it to go above 200 to actually change the trend. Because right now it's just basting out. So it is trying to change the trend, but it's just in the process of doing that. It can still fail. So if it actually fails this area right here, the next demand zone is around that 75 $80 area, right? So keep a very close eye on these. So there could be another leg down, so watch for dead cat bounces and rejections of those dead cat bounces, right? So if it hits up here, it gets rejected, then it starts failing. It's likely it's going to create new lows and come all the way down here. If we head into a recession, you can expect there's another leg down, another big fast leg down, and there's a way that I teach that you can profit off that. But at this moment, if you want to trade this, I the only way to do it is really for the longer term because the chart itself is not viable. But if you're looking for longer term, then yeah, have that trading plan of just dollar cost averaging at these key support lines, and then just uh, get your sizing properly so that when you start to size, you go small, and then as you hit these key supports, you start averaging in a little bigger. And like I said before, you only want to allocate 50% of your full position while it's going down, and then you wait. The other 50% you wait till you start going back up, and that way you're not you're not sitting on all cash, so you're actually putting some cash to work, but you're also not at risk of bag holding your entire portfolio all the way down, right? Because it can get cheaper. That's why you only want to allocate 50% at key areas, and then if it ends up being the bottom, you're gonna make a lot of money on that 50%. Plus, on the way up, you still have money to deploy to make more money on the way back up, right? On the confirmation of a trend change, right? So that's the game plan in the bear markets for longer term. I'm still, like I say, I'm still day trading. I'm looking for longer term positions right now as things getting super cheap, and usually bear markets is where you're gonna make a ton of money once the bottoms out. So have some cash around to do that. Don't deploy all your cash too fast, thinking this is the bottom, because it may not be the bottom. You have to wait for confirmation of a bottom in order for it to happen. So and you also don't want to miss the initial move. So that's why you only want to allocate maximum 50%. Lower would be better. Lower your risk. If you're more conservative, go 30%, right? So that's the way I do all bear markets, and it's been working out in the past few decades. So that's the way you should be trading. Um, Tesla. So Tesla, it hit our levels, broken down. So I said that once that 200 is gone, it's likely that we're going to break down to this area right here. So we hit that area. We're at the bottom range of that area, right? It's likely, it did test 100 kind of, and then it bounced off that. So, it's very extended right now in Tesla. We could see a dead cat bounce, likely 140, around 140, 150 area. So if it bounces back up to 140, 150, it's like he's going to get rejected, and then we're going to come back down to like $80, or if it really comes down, that $60 range is very attractive. So to play something like Tesla, I did talk with our advanced course level 1 members how I would play this. And at $100 is where you want to start a position, and then at 80 and 60 is where you want to start layering into the position, uh, looking for a bottom around here. So if you look at the volume, right, capitulation is pretty close, because every single time when there's big increase in volume like this, is usually a lot of panic selling, and usually that's always end up being the bottom. So watch this very carefully. To come down, and control your risk, right? So right here, if you're going in, allocate maybe 20% of your full position that you want to get in with. So if you're looking at 500 shares, right, get 100 shares or something, right? And then if it goes down to 80, add to 100. If it goes down to like 60 and then it's holding 60, that's where you want to add the rest of it, right? Or you can layer in 4 times instead of three. It's really up to you how you want to play this. But normally, what I do is I sell options at these key areas, and then if they get a sign, I sell more options further down, and then I sell more options further down. That way, I'm lowering my cost average, and I'm also collecting some income while I'm waiting for the stocks to bottom out, right? Because at these areas right here, what's the worst you can do is another 50% drop from the original price, from the price, right? So as long as you know your risk, and you can size it properly, then if it does come all the way down here, and then you're going with a half position, and then you finally start rallying back up, well, all it takes is that one rally back up, you make all your money back plus more, and you make a huge amount of profits. It doesn't need to go all the way back up to here to make any money. If you average dollar cost averaging 100 all the way down to 60, all you have to do is bounce off the 60 and go back to 100, and you already made a ton of So you're not looking for it to come all the way back up. You're more looking for a way to profit off off the stock based on the demand zones and where you can go from there, right? So that's pretty much it for stocks for this week to look at. And the trading plan this week, it's pretty simple. The third week is expiration week, and there is still a lot of puts that needs to expire worthless. So expect there is some sort of volatility in between, and expect that we're going to get somewhat of a push up towards that January 20th expiration to make all the puts expire worthless. So market makers can pocket all the premiums and make a lot of money, right? So usually when that happens, if we get pushed towards those max pain areas, they tend to bounce very hard off those levels. So if there was a lot of people selling puts say at 3,800, right, it's likely we will be closing above 3,800 if that's the case, right? Or if there's a lot of people buying calls at 4,000, it's likely we won't be below 4,000, right? So keep an eye out on stuff like that, and then hopefully you can make money off these short-term price movements in the next week or two. So let's take a look at the algo. Um, on Friday, we made a ton of money off Friday. It was a very, very strong move and was kind of predictable at the start. So right at the open, we went up. We tested like a pre-market high, which is this range over here. We hit there and then got the full rejection with an engulfing candle right here. So you can see uh, uh, we hit there and then it came back. It filled the gap, right? So that was the play I was going to look for. So we played the puts on there and then we filled the gap and then when we make this reversal hammer, that's where I load it up, and then we ride it all the way down up to here, and then I got an out. And then on the way up, all I did was I mostly sell spreads because up here it was kind of risky to play long side. So after we broken out of this area, I start kind of just doing short-term trades and roll up my puts and stuff like that and play. And as you can see the algo, after that initial drop, you got the buy signal around right here on the breakout, and then you just kind of stay up there until you got the sell signal right here at this consolidation right there, right? And then at the last leg where the moving average gets stacked together right here, also where the buy signal comes in. And then all you have to do is follow the 8 or 21 day moving average all the way up until they break, right? And it did not break till closing time. So you could have made quite a bit of money just following the algo on Friday. It was a big day to do that. And the last couple weeks or so, the algo hasn't working great on trend trading, but you can still capture some pretty good moves with the aggro using the 2 minute time frame and the 5 minute confirmation. So let's do it on this day right here. So uh, right here is on so that's on Friday. So this is more Thursday right here or Wednesday. Right? So same scenario, it gap up, it hit a resistance point like around right here, it got rejected. Fill the gap, and then it start basing right here around the moving averages, and then you get the buy signal on the aggro, and you could ride it all the way up to the top. And then at the top, it gets a little bit choppy on the way back down, right? So you do get some buy and sell signals right there. So when the range is getting too volatile like this, the aggro doesn't work as well because it triggers the momentum a little bit too quickly. So it does trigger false signals. But if you apply like basic technical analysis by using moving averages and as well as volume to confirm your moves, then it's likely you can reduce a lot of your losses. And then if you get faked out, all you do is apply your risk management, get out of the trade, and then the ones that do work out is the ones that you're gonna make a lot of money on, and the ones don't work out, you're just going to end up losing a little bit of money. So overall, it tends to work out in your favor using a technique like that, and And as long as you understand the rules of trading and stick to your rules, then you can make money, right? It's usually people lose monies by they're not taking their stops. They're forcing trades when there's no trades. Like when stocks are in the consolidation, you don't really want to trade it, right? You want to trade the trends, right? When it's trending in a direction, you find setups in that trend. That's what the algo is for. Is it's a trend algo, so when it's trending, it's going to do well. When it's not trending, it's just going to chop around, and then you just wait for it set up for the next trend, right? So like right here, you can see that 5 minutes trigger a buy signal, 2 minute trigger buy signal. That's a confirmation of that trade. So if you're taking that trade, right, you could have ran it all the way to close, towards closing time, right? Once you broke above the consolidation lows, you triggered the buy signal, and then all you have to do is set a stop loss and then ride it up, and then once the you start riding up and you made enough for to cover your risk. You move up your stop so that the trade's free, and then you let it ride all the way up until it breaks. That's pretty well the entire process of trading, and it's just some very basic rules that you need to follow. And if you wonder why you can't make any money, is because usually it's because people are not applying rules to trade with. They're going in blind, and they think that it's just because the algo tell them to buy, they can make a lot of money, right? It's not how it works. The algo helps you out, helps you confirm the moves, helps you pick your entries and your exits, but you still need to understand why you're taking that trade, and then what happens if that trade does not work out, and how to apply that risk management into the trade so that you don't lose a lot of money, right? So, anyways, signing off. See you guys next week. If you guys want to check out our Discord, links are in the description below. If you're a serious trader, this year I am spending a lot more time with my day trading members, course members, and we'll be doing regular scheduled Zoom meetings at the end of every month to create a roadmap for everybody to go from novice traders into pro trading profile. So if you are interested in trading for a living, check us out. Like I say, link in description below. Make sure you like, subscribe, and see you guys next time.